Well, a promoter's exit through OFS is under the tax scrutiny. Remember, we've seen a clutch of promoter exits happening more so in 2024, but all through the last 2 or 3 years in terms of block deals or QIPs or both. And as we learn, that IT department is probing promoters, anchor investors in the OFS transactions ahead of public listing. So in case of unlisted stocks, maybe even on some of the listed names as well. The question is, there is some suspicion of inflated acquisition costs to reduce capital gains tax. Now, let's welcome in Mr. R.S. Loona, Managing Partner of Alliance Law and former ED of SEBI, to try and understand what could happen in a scenario like this. Mr. Loona, thank you so much for taking the time out. This is Neeraj here. Good afternoon. The number of deals that have happened as an offer for sale have certainly been very high. We learn that some of this is being probed. What would your initial reaction be to something like this?
Well, as I understand from the news item, that this is basically in respect of the unlisted companies or those companies who may be planning to go for this listing, and before they go for listing and the promoters trying to offload the shares and the issue related to the pricing of the shares and all that. Now, since it's a unlisted company or the transfer of shares taking place before listing, it will not fall within the purview of SEBI strictly, because it's not the manipulation of prices of the listed company. It is only in respect of an illisted company. But yes, the income tax department definitely have a more role to play, because if the pricing is being manipulated to avoid the tax liability or otherwise, definitely this income tax department has a better role to play there. But immediately to my mind, so far as the unlisted companies are concerned, SEBI's role will not be much there to play as of now.
Loona, let me get in my colleague Shrimi, who broke this news as well, to give us the complete detail, and then would love your further opinion on this as well, because remember, and Mr. Loona, I know you have to rush for a meeting, but I would urge you to just stay on for 2 more minutes, because I just want Shrimi to come in and give us the whole detail of this piece, and then we try and get the follow-up question from you as well on this very thing. But okay, Shrimi should be with us in moments from now. Okay, I'm told it is going to take some time. Okay, never mind. Mr. Loona, let me try and take one final question with you, sir, because I understand you have to go for a meeting. The second question would be that we know that in a lot of SME companies, right, shares are issued to some key anchor investors at a very small price or a very low price, and then the IPOs come in about 6 months' time at a much inflated valuation. So that problem exists. Here the reverse is also being thought of, wherein maybe inflated cost in order to justify capital gains. You reckon that, and I'm sure something like this has happened in the past too, how easy it is to get some of these things proven per se?
So one part is that you see this grey market before the companies going for the IPO is very well known. And the sale, purchase of the securities, either through anchor investors or otherwise, that is well known. And I don't think merely because it's happening before the public issue, anybody can take any objection to that. Yes, if there is as the income tax department looking into there's a taxation violations and all that, certainly that can be looked into. But I don't think in respect of an unlisted company, if it is happening like that, the SEBI's role will come into play.
Mr. Loona, do you have 2-3 more minutes, please? Because I have my colleague Shrimi, so maybe she can give in the whole story, but unless you have a meeting. But if you can, just hang on for a minute more, sir.
Yeah, please, I'll hold on.
Okay, great. Thank you. Shrimi, we're talking to Mr. R.S. Loona. He's given his initial thoughts, but of course, I've told him a part of the story. Why don't you enumerate the whole data, and what is the key point, according to you, Shrimi, which should be something that people should focus on?
Yeah, so couple of interesting point here. So I'll start with the story first. That income tax department is, scrutinizing all the promoters and anchor investors, their associates, who sort of exited their holdings just ahead of the public listing, and they are also sort of trying to understand the whether the capital gains tax were paid or paid lesser than what was anticipated on the share sale. Now, 216 OFS happened between FY21 and FY24. Those now come under the income tax radar, and they are examining that. In fact, they have sourced data from NSE, BSE, and they have done their own data analysis where they have made a list of the number of OFS happened, and the companies and the promoters, anchor investor, etc. How much they gained out of it, all the profit, all that computation and the data is there with the income tax department. And based on so what has triggered this trigger after they have found certain misreporting and discrepancies in the tax filing, in the revised tax filing, the date of which ended in January on January 31st. And based on that sort of observation, they have started now sending the notices to many such promoters and anchor investors, because they have clearly seen that misreporting on the capital gains tax. But another interesting point here is that which Mr. Loona can also explain on the part that there is this bone of contention as far as cost of acquisition is concerned. And interestingly, July 2024 budget has already sort of explained that, and that was mainly with respect to the how you're going to calculate your cost of acquisition. And so budget clarified that whatever the cost in inflation index between the date of purchase and 2017-18, remember there was this LTCG rule come into play from April 1st, 2019. So between that, you should take those period before calculating your cost of acquisition. So what expert we reached out to telling us that in the impact on the tax calculation in case of sale of shares and under OFS, seller was not sort of understood whether they are going to pay the whether that transaction is exempt or they have to pay the lesser tax. So that is the bone of contention, which was already addressed in the budget 2024. Since then, even then, they are not sort of going they are not paying. That's what income tax department telling us.
Shrimi, just one quick question, and then we can pose that question to Mr. Loona as well. So is the problem, the key problem, that there is an inflated acquisition cost on the part of the promoter, and then the resultant capital gains that the promoter has made, and in order to show lower capital gains, they have shown a higher acquisition cost? Is that the key contention point?
Yeah, that's the crux point, and that's the suspect which they are of course looking at, because now they are running this special drive also. So that is the crux of the matter, that they whether they artificially inflated the cost of acquisition to sort of reduce their overall tax liability.
Mr. Loona, we understand that this is more a tax issue as well, but considering that you've been in the thick of things, just wanted to understand, would there be a SEBI violation in such a case wherein a promoter may be showing inflated acquisition costs of his or her shares in order to reduce capital gains?
You see, firstly, I said that because it is all happening in the unlisted company, so SEBI's role will not come.
Got it, sir.
You see, the issue is that promoters normally may be acquiring the shares by a preferential allotment at face value or at a very lower value as compared to the fair market price and all that. So that is the actual cost of acquisition, but there could be a situation where when they start claiming the tax benefits, they might be looking at the fair market price at that relevant time, and then the issue of the indexation and all those all complexities of tax might come into picture. And so I think it is more an issue of a core taxation problem than anything related to the securities market.
Okay, well, but thank you so much, sir, for still giving us that clarity, because it's important to get that. Much appreciate your time. And Shrimi, thanks for getting us in the lowdown on this.